Top tips for becoming a homeowner in 2025. Today, we're going to go through the top tips. So stick around because there's a great bonus at the end that really will help things. So, what are we going to be talking about? We're going to be talking about financial health, budgets, understanding mortgages, deposits, and a lot more. So, please stick around and you will learn a lot, I promise. Now, who am I? My name is Amanda, and I call myself the mortgage coach because I combine mortgage advice with financial coaching. I know all about buying property and I know what it's like. I bought my first property when I was just 22, and I've learned a lot since then. So, the first tip: financial health. When you're looking at your financial health, the best way to get to grips with it straight away is your credit score. Now, lenders do their own credit scoring, but if you know what your credit score is, then you can see how healthy it is. So, are you in the poor bracket, the red? Is it amber? Is it green? Is it dark green? At the end of the day, you aim to be in the sort of green area and have a good rating. Now, the next tip under the financial health is tidying up your bank statements. What do I mean by this? I mean, do not live in your overdraft. Yes, it's great to have an overdraft, but try not to use it. If you're constantly going into your overdraft and then paying to come out and then going back in, it gives the lender the impression that you're not very good at managing your finances, which obviously isn't a good sign. The next thing is build an emergency fund. And this should be a couple of months worth of expenses. By having these savings on the side, it stops you from needing to go into your overdraft. When you're going to be applying for a mortgage, they will be asking for 3 months bank statements. So you want to show, clean bank statements. The next thing is a budget. Now, by figuring out what you are spending every single month, then when you actually do look to get a mortgage, you know how much you can afford per month. Everybody, when they're looking at mortgages, they look from the perspective of how much can I borrow, but you should also be looking from the perspective of can I afford to pay this month on month. By setting yourself a budget, then you can actually work out how much per month would I literally be able to pay on a mortgage payment, and that can also help. The other thing is you can factor in putting that amount of money every month aside for the deposit. The next thing is you need to factor in all of the other costs that come with mortgages. So by having a clear budget, then you know what you're spending and what you're saving and whereabouts you are. Right, the next thing is understanding mortgages. Now, there are a lot of mortgages, different types of mortgages, and mortgage terminology. You really need to get a better understanding of this. Of course, you can go to a mortgage advisor, but if you have an understanding yourself, that also is helpful. So I have tons of videos on mortgages and how it all works. So feel free to subscribe and put the notification, and then we can work together through this. Now, when it comes to understanding mortgages, there are several different things to be aware of. Now, first, when you're looking at an actual mortgage, this is the loan that you're paying back. The loan is then got interest charged on top. Now you can actually, go with the capital and repayment, which is what's standard for residential, and you will be paying back the principal loan, the loan that you borrow, plus interest. So then at the end of that term, you've paid everything off and there's nothing outstanding. So it's capital and repayment as opposed to interest only when you're only paying the interest. Now, the next thing to be aware of is fixed variable tracker. Those are all types of mortgage deals. So if you go for a fixed rate, that means that the interest rate is fixed for a certain amount of time. So if your deal is 2 years, 3 years, 5 years, that's what we mean by are you doing a 5-year fixed or a 2-year fixed? The interest rate is fixed for that period of time. Now, variable, it will change month on month, and tracker, it's linked to the Bank of England rate. So every couple of months, the Bank of England will announce an interest rate, And if you're on a tracker, it will be linked to that. Now, the next thing to be aware of when you're thinking of mortgages are there are special schemes, affordability schemes. Now, if you have a council property, right to buy might be applicable for you. If you want to own part of it and but you can't afford to buy 100%, then there are options like shared ownership. With shared ownership, and there's a whole video on that as well, please be aware that you would be renting part of it and owning part of it. So you'd pay a mortgage on part of it and you pay rent on part of it. So it's not always the most cost effective way. So just be aware of that. But sometimes can work. With the right to buy, I have got a lot of videos on that as well. So in the description, I'll put a lot of links to different videos. Now, the next thing is saving for a deposit. Now, as I mentioned, with your budget, it really does help because you know how much money you can put aside each month. But would be good as you're getting mortgage ready to have initial understanding of how much you can borrow based on your affordability. So that's things like your income, be it earned, be it employed, be it self-employed, be it benefit or whatever your income basis is. But how much can you actually afford to borrow? Because once that's worked out, and again, you can ask a mortgage advisor to help you with that. Or you can go onto a mortgage calculator. Once you figure that out, then you can say, okay, I can borrow, say for example, 200,000. So my goal is I want to have a 10% deposit. So I'm going to save 20,000. If you don't know what you can borrow to begin with, then you don't know what kind of deposit you need to sort of work on saving up for. So it is quite useful to figure that out first. What I tended to do, it was all about money mindset for me to save my deposit. From my very first ever job, I set up a direct debit that on my payday, my money goes automatically out into a savings account. So you could have an ISA, a LISA, a long-term savings account, something with high interest that you have difficulty accessing. And then that way you will literally just on the day you get paid, part of your money goes off to save for the deposits. You never see it, you never miss it, and you never feel obliged to use it because you've never had it. So I find that's really helpful. I mean, I know when I graduated from uni, my salary did go up quite significantly, but all the extra money I just literally put into a savings account. So direct debit on the day I got paid, removed that money. So I was still on the same income I was when I was working part-time at uni because I didn't need that extra money. So again, a budget will help you decide how much you actually need and how much you can put aside. So all of those are really, really useful. The next thing is the mortgage process. So you really do need to understand what the process is. So, for example, at the very beginning, you will have to obviously do a decision in principle. Now, a decision in principle or application in principle is done when you want to it can be shown to estate agents. It can be it's good for you to have as a certificate so you know how much you can borrow. Now there are tricks with the decision in principle. It can play with your negotiation when you're going to buy it a bit later on. So the decision in principle, you don't always get it for the maximum that you can borrow. You get it for what is the most that you want to spend. And I can go into this in a bit more detail if you'd like. Put in the comments if you've got any questions here. The other thing is mortgage preparation. As we said, there's a lot of areas of it, but the other thing is your ID. So you need to make sure that you've got ID, you've got proof of address, you know where your pay slips are. They sometimes, if you're asking for your bonus to be included or overtime, they might ask for your P60. So make sure you know where all your documents are, because having to go back to HR and ask for duplicate copies or ask them to send stuff again can be, sometimes isn't even possible, and sometimes can be, if it is possible, can be quite time consuming. The next thing to be aware of is when you're searching the market. So what I mean by that is when you then know what area You know what amount you can spend, what the most you can borrow. Do you want to live roughly where you are now? Do you want to move out? Is it close to work? Is it not close to work? Do you need to be aware of catchment areas? What is your criteria for where you want to live? And you know, on what kind of property you want. You might think, okay, I'd like to live in this area, but it'll mean only buying a flat, but I can live in another area and it'll mean I can afford a house. I mean, what are your goals? It's good to know what your goals are for the next 5 years to make a decision on that. But when you are scouring the market trying to figure out what you can afford and what you can't afford, things like Zoopla and Rightmove are really, really good to sort of give you that kind of information of how much properties cost at this moment in time. The other thing to be aware of when you're scouring the market and deciding whether you're going to get a flat or a house, be aware of leasehold and freehold. Again, I've got videos on that. But basically, in a nutshell, freehold is normally for a house, leasehold is normally for a flat, and leasehold does have a time limit on it. So it may be 99 years, maybe 100 years, maybe 999 years. But if the lease is low, that means that the amount of time. So basically, a lease is you don't own the land and the property, you just own the property. So the lease is how long you have access to the land that the property's on. So it's very, very important that you have a decent length lease, because otherwise you'll own the property, but the land it's on, the lease will expire. Before that even happens, when it's about 75 years, the lease, it does become unmortgageable. So you've got to consider lease extensions, which also can be quite costly. The next thing to be aware of is knowing who to ask about what. So obviously, you've got the estate agent when you're actually looking to go to the property. You've got the mortgage advisor who can give you all the information about the mortgage, and then you've got the solicitor who will deal with all the legals. And then you've also got a surveyor who will help you decide on your valuation. So they will do the valuation for you, well, the type of survey. Three types of surveys: you've got valuation, you've got home buyers, and you've got full structural survey. The next thing to do is to plan for unexpected costs. Now, this could be, you can put this in your budget. Could be possibly repairs or any upgrades you might need. I mean, some people will go, for example, for 100% mortgage, but if they buy a property that's a fixer-upper, then they can build in equity at that point. So I would recommend that you be patient and you strategize and you come up with a plan now. I do think that educating yourself and understanding how all of this works is very, very important. So I do have courses, and I will put the links in the description. One is called Get Mortgage Ready for first time buyers. One is Get Mortgage Ready for Right to Buy. And bearing that in mind, it gives you a series of workshops that go into all of this in so much more detail. If you've enjoyed the video, please like, please subscribe, please share with any first time buyers that you feel would benefit from this. And then let's see. But I think my bonus tip would really be to educate yourself. It is so important to understand what the market is doing. Are properties increasing in value? You can actually do a link on Zoopla and say this is the area you're interested in, and then as properties in that price either go up or down, they can send you an email alert. So that's really useful. What I did is I went into estate agents and gave them biscuits. I mean, this time of year is perfect. You can go in and say, Happy New Year, here's some biscuits, and hopefully they'll think of you. So when property is about to go on the market, you might get a call before they start advertising. So that gives you an opportunity. But I think being educated really, really does make a difference, which is why I offer these courses. If you are someone that needs help improving your credit, I also offer a credit review service. But as I said, all the links will be in the description, and we can go from there. I hope you found this interesting and informative. And again, please subscribe, and we can become homeowners. I can help you become a homeowner in 2025. Thank you.